So NIO Stock, ticker symbol NIO, is a very popular one, and it's a very highly debated one as well, because NIO is often referred to as the future Tesla of China. And back when they IPO'd in September of 2018 for $6.26 a share, the stock quickly surged up over 120% and then crashed right back down by around 60%. And it's been pretty volatile ever since, but it's still trading much lower than their 52-week high of $13.80, currently trading at less than half of that at just $6.63. Now, as you guys know, I do consider this to be a very speculative stock, and so it's therefore a very tiny position in my portfolio. In fact, it's the smallest position in my entire portfolio. But now that we're heading into 2019, a few questions do arise, like how is the company performing so far? Considering that the stock has come back down so much after going up by so much, where do I currently stand with this stock? Am I buying more in 2019? Am I feeling bearish, and is it time to just sell and move on? Am I just holding? We have to look at a lot of different things. So we're going to look at the stock, the company, everything that they're doing, and how I currently feel about the entire situation. All of that and more in today's video. Let's get started. What's up, everybody? My name is Ale and welcome to my world of stocks. Now, if you do enjoy this video, please hit the like button. It really helps out a lot and I really appreciate it. But let's go ahead and start with NIO as a business and their company, and let's run through everything that they're doing. Now, if you've never heard of them, they're an electric car maker that sells high performance electric vehicles with autonomous driving functionalities, but for a much cheaper price than something like Tesla. Now, they do manufacture their cars right now through a partnership with Jack Motors, who is a Chinese auto manufacturer, pretty reputable Chinese auto manufacturer, but they do have plans to have their own plant up and running, and then they'll probably still be working with Jack Motors even then through maybe a little bit of a smaller partnership. But when looking at their lineup, this includes the EP9 supercar, which is not a mass production unit, but it is the fastest electric vehicle in the world. So it's a very reputable, very high performance supercar. And when looking at their mass production units, they do have their 7-seater ES8 SUV, and they just recently unveiled their smaller and cheaper 5-seater SUV called the ES6 back in December, and it should start being delivered by June of this year. And a lot of high hopes are being placed on that vehicle, as it should be dramatically cheaper than any SUVs that Tesla is currently offering. On top of that, they also offer a number of features and services, like their artificial intelligence assistant called Nomi that sits on the dashboard and assists the driver with things like navigation and entertainment, including music, videos, and even online shopping. And NIO also offers power services as a subscription, where customers can swap batteries for fully charged ones, or even have a mobile truck come out to you and charge your car a third of the capacity in just 10 minutes. And you can sign up for all of that through the mobile application that NIO offers. Now, of course, Tesla is much more of a popular, more reputable, and more expensive brand, so it's safe to assume that their cars are going to usually have better overall performance and appeal. But the compelling case for NIO as a company is that they can get somewhere close in terms of performance and functionality for a much cheaper price than something like Tesla. You can see that on this chart here, where NIO's performance is actually quite comparable in some situations. Now, speaking of prices, according to CNN Business, as recently as November, Tesla was cutting prices to absorb the impact of tariffs in China on Chinese consumers. But their basic Model S was still priced at around $113,000, while their highest Model X was over $170,000, and even their cheaper Model 3, which by the way is not an SUV, would still cost close to $80,000. Now, to be fair, it is looking like China will be cutting tariffs on automobile imports, but even then, you gotta figure that Tesla might just raise those prices back up to compensate for the difference. In any case, NIO's offerings are drastically cheaper. According to The Motley Fool, the base model of their new ES6 SUV costs only around $50,000, and that's before the subsidies that the Chinese government offers, which according to Investors Business Daily, when coupled with taxes, this can make NIO's ES8 cost somewhere close to 3 times less than Tesla's Model X. However, it is expected that when Tesla is finished building their new factory in Shanghai, that could dramatically lower prices for consumers and lower costs for Tesla. and that factory is scheduled to begin production of their Model 3 by the end of the year, and then the Model Y should follow soon after, maybe like the year after that. So then the question becomes, will this destroy NIO and its advantages? Well, I don't really think so. First of all, China is the largest and fastest growing market for electric vehicles in the world. Here's a chart from McKinsey.com, which is a business research site, and it shows the electric vehicle index for some of the largest electric vehicle players in the world. And you can see that China really dominates and showed drastic improvement from 2014 to 2016 in terms of increasing both supply and demand. And moving to 2017, here's a chart from Statista.com showing how dominant China is in electric vehicle sales, with almost triple the numbers of the next closest competitor, which is the United States. And even if we look at future predictions, JD Power predicts that China's electric vehicle market share will grow by a massive 40% in the next couple of years. And to add more to that, here's a chart from Bloomberg that shows projected electric vehicle sales all the way to 2030. And you can see China as the white bar there, and it is just growing massively and commanding an enormous portion of sales, even beating out all of Europe just by itself. Not to mention that starting this year, China is implementing a cap and trade system in the automobile market. You may have heard of the cap and trade system that's been famously used in Europe and several other parts of the world, but what essentially happens is that car manufacturers who fail to meet quotas for zero and low emission cars will have to pay fines to the Chinese government. And if electric vehicle manufacturers like NIO actually exceed those quotas, then they get to sell their credits for the year to those companies that fail to meet the quota so that they can avoid fines. So it basically helps electric vehicle makers and hurts traditional gas car manufacturers. So when looking at China, we're talking about a country that is already dominating heavily and is still growing faster than any other country out there, right? So you're talking about a country, a market that is dominating and it's growing. That sets up to be a really good market for a company like NIO. However, there is a huge concern here, and it's one that NIO bears love to bring up very often, and it's a pretty valid argument, and that's that China's electric vehicle market is overly saturated with EV companies. In fact, there's estimates of there being close to 500 electric vehicle related companies or startups in China, and that's a huge number of competitors. But are they really true competitors? See, most of these companies are not really doing what NIO is doing. NIO is a Tesla wannabe or a Tesla-like clone for a much cheaper price. It's basically the first one to list publicly in the US, and it's backed heavily by huge companies like Tencent, Baidu, Lenovo. Shoot, even Tesla's second largest institutional investor, Bailey Gifford, also owns about 11% of NIO himself. Most of those other Chinese electric vehicle companies either have very little funding in comparison, or they only sell super cheap electric vehicles that cost around $10,000 or even less. And most don't even try to compete in any kind of autonomous driving, which is really where NIO and Tesla offer a lot of their services. A lot of them are just tiny and cheap electric vehicle cars for the average person with a tiny budget. Now, don't get me wrong, that is still on its own a very big market in China as well. But it's not the market that NIO is really going after. NIO is going after the more high-end market, people that would buy something like a Tesla. And it's funny because NIO bears a lot of times are also Tesla bulls. And look, I'm a Tesla bull myself. I'm not invested in Tesla, but I believe in Tesla in the future. And I'm not saying that like all Tesla bulls are NIO bears. A lot of them like both. And like I said before, right? Some big investors in Tesla are actually invested in NIO as well. But it's funny because a lot of these Tesla bulls that are NIO bears, they'll say that NIO can't survive in an overly saturated Chinese market, but they say that Tesla can. And Tesla costs way more than anything that NIO is offering. So, I understand that Tesla has a better brand, is more popular and things like that, but the price matters, and they have a much higher price. So, you have your like cheap budget electric vehicle cars in that kind of market. Then you have kind of the middle class, rising middle class market, and then you have the rich class market. And at these prices, I mean, I kind of figure that Tesla is kind of going after the very high end, much more expensive market, whereas NIO kind of fits in between the middle a little bit. You could see maybe some rich people with maybe a little bit of a smaller budget, and you could also see some rising middle class maybe tapping into something like a NIO. And look, I can already feel the negative comments coming, and I just want to reiterate, I'm not saying that NIO is going to be better than Tesla. I'm not saying NIO is going to take out Tesla. Nobody's saying that. Nobody believes that. Or I don't know, maybe some people believe that, but I certainly don't believe that. What I'm saying is that there's not as many competitors to NIO as people make it out to be, as all the bears make it out to be. I mean, when you look at a real competitor to NIO, you're probably talking about something like Xiaopeng, which is backed by Alibaba, and it's really a true threat to something like NIO. But they're only barely now releasing their first car this year, whereas NIO already started and NIO just kind of has a lead already. But a lot of that has to do with my own opinion. So let's start by looking at some actual numbers here. Now, many people want to compare Tesla right now to NIO right now, and that's not really a fair comparison. Last quarter, I think Tesla did like over 80,000 deliveries total, but if you look at what they did in their first 6 months of deliveries back in 2012, they only delivered around 2,600 vehicles, that being their first Model S. Now, when looking at NIO, they started delivering their ES8 in the end of June, and roughly 6 months later, they've already delivered over 11,300, with 3,300 of those being delivered in December alone. So that's an enormous increase on an already very impressive November, where they also saw over 3,000 deliveries. And keep in mind that guidance was only for 10,000 deliveries in 2018. So NIO has already beaten guidance by more than a double-digit percentage at around 13%. Now, it's true that NIO is still not profitable and is therefore losing money, but they are at least improving at a pretty fast rate. Now, we're still waiting for NIO to release their Q4 earnings, which should come out sometime soon. But when looking at their last Q3 earnings, they did see loss from operations increase by around 50% quarter over quarter, but we also saw revenue increase by over 3,000%. And their gross margin also improved from negative 333% to just negative 8%. So that is a dramatic improvement. And when looking at guidance, they're expecting the fourth quarter to be solid as well, with around 100% increase in both deliveries and revenue from the previous quarter, which they should easily exceed considering that we already know deliveries is higher than expected by around 1,000. And looking at their balance sheet, it's obviously not going to be the greatest one around, as they've had to spend more and more money to get the company up and running. But it is much better than bears make it out to be, and currently they have about $1 billion in cash, with total assets at about $2.5 billion, while total liabilities sits at about $1 billion. So while costs are going up due to scale and increase in production, we're also seeing revenues increase, we're seeing margins improve, thanks to that same increase in scale and production. And if they keep, kind of going at this rate, we could probably see profitability arrive sometime soon, and probably a lot sooner than the bears are thinking. So in conclusion, I'm left with a few different thoughts. Now, I still absolutely believe that NIO is a gamble stock. I still consider it a speculative stock. And look, I get criticism from both sides. Okay, bulls hate me because I say that it's a gambling speculative stock, and then bears hate me because I'm actually invested in NIO and because I'm pretty bullish on them in the long term. But that's the beauty of stocks. We don't know what's going to happen in the future. I mean, if we all knew that NIO was going to be this massive company in the future and is going to, easily compete with something like Tesla later on, then we'd all be investing in NIO. And obviously that's not the case, right? The stock came right back down and crashed quite a bit. So obviously there's a lot of people that just don't believe in the company, and there's a lot of people that still do believe in the company. I mean, they're still kind of expensive for a company that's not really profitable and still hasn't really proven a whole lot. On top of that, you have a very saturated market like we talked about before, and whether that's a real threat or not, it's still something out there to consider. And we're gonna probably see more companies like Xiaopeng, backed by Alibaba. We're probably going to see these other kind of startups popping up as well. So there are definitely some concerns. Everybody wants a piece of that Chinese electric vehicle market. We're going to see more competition from like BMW and Jaguar and all these other, manufacturers as well. So it's not going to be easy. On top of that, you have the Chinese economy really slowing down, right? The Chinese economy has been experiencing a pretty big slowdown. And then you also have the whole trade fight between China and the US. But in my opinion, and again, this is just my opinion, I really see those as short-term issues. And, as a long-term investor, that's usually where I like to do most of my buying, is whenever there are some short-term issues that can keep a stock down. Now, in terms of like my average cost basis, things like that, I've been buying in the $6 range. I know there's a couple times where it went up to like $8, and I could have cashed out, but I didn't because, again, I'm a long-term investor. That's, there's pros and cons to that, right? Like you can't sell when it's going down. You also can't sell when it's going up a little bit. there are exceptions, of course. If a stock climbs too much, I want to cash in profits. There are exceptions, but I'm usually thinking long term. And to me, long term means, 5 to 10 years, usually much longer than that. And if possible, I really like to hold many stocks just kind of for the rest of my life, really. So, and then maybe at some point, maybe when I retire, things like that, maybe cash in profits and things like that. So anyway, the point is that I'm not just thinking this year, I'm not just thinking next year, I'm thinking quite a bit away. And if NIO can actually make it out there in the future, and maybe they can become a global company, and maybe they can eventually at least somewhat compete with something like Tesla, then I could potentially make a lot of profit on NIO. But again, I think of it as a little bit of a speculative stock, and there are a lot of short-term concerns. We know about China's manufacturing also slowing down recently, so there are definitely some concerns, and I think we may see the stock struggle in the short term, but again, in the long term, I do have high hopes for this company. Having said that, I feel the most comfortable buying $6 range or less. So if it ever dips below $6, I saw it a couple times and it didn't last very long. But again, anything can happen in the future, right? This stock could go to $3, could go to $2, who knows? But anywhere $6 or below, I'm comfortable buying. Anywhere above $6, I'm probably not buying, or maybe buying very slowly. But I still have not purchased any NIO stock above $6. I've only been in the $6 range. So anyway, that's where I currently sit, just to let you guys know, because I know you guys ask me about that sometimes. And I think that's just about it. So if you have any questions, comments, let me know down in the comment section. Let me know how you feel about NIO stock, and let me know if you're invested in NIO stock. I'd love to read all about it. And I will catch you guys in the next video. Take care. I'll see you guys later. Bye-bye.